Gold remains under pressure after breaking below the $4,000 level. Higher oil prices and treasury yields continue to weigh on precious metals. Gold, XEU, prices fell on Thursday and hit the lowest level in over 2 weeks. The oil price climbed as supply disruption fears mounted in the Middle East as tensions increased. Rising oil prices may contribute to higher inflation. The Fed may keep interest rates higher amid higher U.S. inflation, which keeps pressure on gold and silver prices at their key support levels. The U.S. Treasury yields and the U.S. dollar also remain strong. The recent inflation data was softer. But the higher energy prices and the expectations of higher energy inflation increased the odds of a rate hike by the Federal Reserve in September. The Fed may not be as willing to take a more dovish tone following the inflation data as energy prices remain strong. Gold price forecast, break below $4,000 puts $3,850 support in focus. Gold daily chart targets the $3,850 support region. The daily chart for spot gold shows that prices remain under pressure. Prices broke below the $4,000 area and continue to move towards the $3,850 support region. This support is defined by the lower boundary of the wedge pattern. A break below $3,850 will indicate a strong move to the downside. But a strong recovery above $4,200 after a drop to $3,850 will increase the chances of an upside breakout. A break above $4,200 will push prices towards $4,350. On the other hand, a break above $4,350 will open the door for a move towards the $5,000 area. A break below $3,850 will increase the chances of a strong and quick drop in the gold market to mark the final low. Gold must reclaim $4,200 to confirm a bullish reversal. The 4-hour chart for spot gold also shows strong bearish price action since March 2026. The formation of rounding tops below $5,000 and then below $4,500 indicates bearish pressure in gold. Prices must recover above $4,200 in the short term to confirm bottom and initiate a rally towards $4,500. A break above $4,500 will be a positive sign and open the door for a move towards $5,000. Gold wedge pattern signals volatility near $3,800 support. Another 4-hour chart for spot gold shows that the price is now approaching the apex of wedge. A break above $4,200 is required to break the wedge pattern and open the door for further upside. But the immediate support remains in the $3,900 to $3,800 region. As long as the $3,800 region holds, the possibility of strong rebound remains. But July is known for choppy and overlapping movements in the gold market. Therefore, the short-term price direction may remain uncertain. There might be erratic movements in the gold market before the final move in either direction. Silver market outlook. Bearish momentum eyes the $45 to $55 zone. Spot silver is facing intense downward pressure, with technical charts pointing to a potential slide into a major accumulation zone. While the short-term outlook remains weak, holding key long-term support levels could set the stage for a dramatic rebound. Key technical levels to watch. The critical pivot, $55 silver is currently testing this vital support level on both daily and 4-hour charts. Bearish scenario, a clean break below $55 opens the floodgates for a drop toward $50, and potentially $45. The accumulation and floor zone, $45 to $50. This region is widely considered the final drop territory. If prices hit this zone, it is expected to attract significant buying interest. The line in the sand, $45. As long as silver stays above $45, the long-term bullish thesis remains alive, keeping a future rally toward $72 on the table. The bullish trigger, $64 to completely shake off this bearish spell and shift the trend upward, silver bulls must reclaim and break above $64. Technical and macro headwinds. The charts and broader market dynamics are currently aligned against a quick silver rally. Chart resistance, a descending dotted trend line on the 4-hour chart, stretching back to the May 2026 highs, continues to cap recovery attempts, keeping the immediate momentum firmly bearish. The triple threat, a robust US dollar, climbing treasury yields, and elevated oil prices are collectively acting as a heavy drag on precious metals. The gold connection, for a broader sector recovery, gold needs to climb back above $4,200 to restore confidence, while silver itself needs to ease off the pressure from treasury yields. The bottom line, expect short-term pain and potential slides toward the $45 to $50 range. However, if buyers step in at these discount levels and the $45 floor holds, it could serve as the ultimate launching pad for the next major leg up to $72.